everybody. Welcome, welcome, welcome.
Welcome.
Thanks for coming.
Thank you for letting me be here.
Appreciate your time.
So we'll just kind of pick up where we left off. We got through half of our outline, but I think we'll keep moving, and I'll just softball the next question to you, if that's okay.
Sure. What is it?
Here's the question. What appraisal requirements are common with PMI and or conventional loans? And to kind of piggyback on that, what appraisal requirements are common on FHA and VA?
Well, let's start with FHA and VA, actually. Because FHA has minimum property requirements, MPRs, right? So you're going to put your home under contract. You are going to send that PA to one of the two of us. Your borrower is going to sign their application, and then we order an appraisal. The appraiser goes out, and the appraiser is not an inspector. It's often a misconception that happens. They think that they're going to inspect the property. They're not. They are looking for obvious defect to property and making sure that it hits a defined set of parameters by HUD, and it's called the minimum property requirements. That's when you have your repairs, right? So you get your appraisal back, it says you're at value, but you have repairs, and here's your list of items. Most common is scrape and paint. If they can't determine the isolation distances between well and drain field, they may require a septic inspection or water inspection. I can't speak to all lenders, but we don't require well and septic unless there's an obvious issue brought up by the appraiser. So you don't necessarily have to get them for our purposes. That does not mean you don't want them for your purposes. Right. No, that would always get them. VA has the same thing. They've got their own set of hot button issues. That depends a lot on your appraiser, whether they have a belief that they have to protect the vet at all costs, or they do not believe they have to protect the vet at all costs. Some of them take the position that they will protect the vet by getting them the home. And in my opinion, that's the right stance. Others are going to protect the vet, and it feels like they're trying to stop them from getting the home. We work those things out. We have an opportunity to have discussions. You probably have heard reconsideration of value. That happens on a case-by-case basis. On all product, you can do that across conventional VA, FHA. With VA, prior to you having value issue, you'll hear the word Tidewater.
What?
Tidewater. Tidewater simply means that the appraiser is not coming up with a value, they want comps. You have an opportunity to provide those comps as the listing agent or the buyer's agent. You have a limited time period to respond to that request. So if you see an email come across your desk or your computer, and I know you all don't look at your computer every day, please do if you have a transaction going. Chris will text you, I'll text you, we'll call you, we'll talk to you about it, but right? But it's your opportunity to rebut. It's your opportunity to say, yeah, but. It's your opportunity to say, what comps did you use? Oh, here are the comps that you should be using. Now, you may not even have the comps yet because they called it out early, but we can normally track those down for you. Conventionally, you're not going to have that many requirements to an appraisal. I mean, it's a standard form on a standard sheet with a standard format. Freddie and Fannie basically use the same one. They have different numbers on them, but who cares? If there's PMI, that was part of the agenda item question. The PMI companies, especially 07, 08, they reviewed everything that came through. They were looking for repair issues. That want an appraiser to go through and take a photo of a ceiling with a hole and water dripping through, and then that might mandate something on a conventional appraisal. But outside of that, they avoid it at all costs because they know that you all are going to come back and say, it's conventional, I don't have to do repairs. Right? So.
I want to add just two things. I was going to bring up Tidewater too. I think that's brilliant. The cool thing about Tidewater, again, if you're a listing agent considering offers and a VA offer is one of them, yeah, you got to consider the quality and condition of the property you've listed, but what a cool opportunity to almost appeal the value of that appraisal prior to the completion of the report. So typically we get an appraisal back. If the value's low, then we got to submit an appeal. By that point, the appraiser's work is like done in their mind, and getting them to reconsider value. I think our success rate nationally was around 7%, and that's not always all the way to contract price. That just means they reconsider value to some degree. So, great point. Thank you for that. And the second thing I would add is for conventional appraisals, yeah, the minimum health and safety requirements are pretty minimum. You want to have a working, functional bathroom, shower, has to have a kitchen. But like if trim work isn't totally completed, that's not necessarily a problem for getting through on the conventional loan. I mean, we can have it appraised to kind of basic health and safety standards to avoid conditions on the appraisal to help the transaction move forward. So, you know, of course, you gotta know as a listing agent your property, and ahead of listing the property, don't hesitate to call me or Jeff. Our collateral team's happy to review properties and say what they can see from the photos. But of course, the appraiser at the end of the day is our only eyes and ears on the property, really, other than what we can find online, so.
Let's dovetail just a minute off that too. Reconsideration of value.
Yeah.
Often people come back and they'll say, well, I got a great comp for you. This comp is a newer furnace, it was just installed, it's got brand new windows. And maybe let's just use those two items. An appraiser expects you to have a window that opens and closes, and they expect you to have a house that heats, right? You're not gonna get your value off that. So you need to base it around sales. You can sell it for more. It has more market value, but you can't really quantify that within that appraisal. So when you're looking for your reconsideration of value, you absolutely want to start with room count, square foot. Take things that are impactful from a numerical standpoint if you can. Don't look at cosmetics, because cosmetics really don't matter all that much unless it really drags you down on a condition.
Some of those, they have a standard amount set for cosmetic type things that you'll have put in, countertops for example, and it just doesn't bring that much value. What you really need is comparable sales at the end of the day. And comparable sales after the effective date of the appraisal. So when the appraisal was completed, they have to have closed, prior to the effective date of the appraisal. You have to find comps from before that.
Do they have to be within a certain period of time, like within a year? Sold within the
Sooner
last
the
year?
better, but I have used, depending on if it's more rural and there's fewer comps around, you can typically start to expand the scope and go further back in time. There's no real limit, but if there were better comps that are more recent, they're obviously going to want to use those. So.
And when they review the appraisal, they actually pull up comps.
Yep.
It'll go through the data set and it'll come back up and it'll say, here's 15 other homes that sold within a quarter-mile radius of your house. Why didn't you use them?
Right. And that's why we'll have comments internally that we have to complete with our processing team to justify for Fannie Mae why the appraiser used the comps they did.
So why do you think, what's their motive to do that? I mean, it seems like they're undercutting, they're under the appraiser, they're undercutting themselves as far as letting that person get that they don't care or they don't.
Well,
this is Fannie Mae.
Yeah, and they're.
Well, same thing with VA though. I mean,
an appraiser's job is to find 3 like and similar comps. So if it's a two-story, a ranch, has to be in close proximity and has to be reflective of the market, right? So there's oftentimes they won't use it. Let's say I'm doing the review and I say, why didn't you use 123 Main Street? And I say that to the appraiser, right? Because it sold for $30,000. You're saying your house is worth $230,000. It sold for $30,000. What the hell? What's going on here?
sure.
Well, that was a burned down home. They don't know that. It doesn't show up anywhere on the piece. It was just a burned up house. Okay, well, it's worth a lot value. It's $30,000. Well, that's an easy one to come back with, right? But those are the questions we often get. Why didn't you use this? Jesus.
Yeah,
Could
right.
be a knucklehead, right? But they don't know. It's just that here's an address and here's a sales price. Tell us why. So the appraiser's trying to find the most like, most similar, closest in proximity and closest to market value. That's how they're picking.
There are 3 common valuations we're seeing right now on the lending side. It's the full appraisal. There's a PIW, property inspection waiver, where we're just looking at online comps that Fannie Mae identified and it's validating the value for us in the system. And then what's that middle one called again? Just the data collection.
It's almost like a desk review.
Yeah, we'll get a validation for the value, but we'll still have to go in and get the data. Fannie Mae is collecting data from all of the comps on all the completed appraisals. They're a massive data collection agency, essentially, right? They're an insurance company. They love data, right? So they're trying to get all this information and justify all the comps and all the appraisal reports to further and further automate the evaluations on properties. And there are some big pros and some big cons to heading down this direction. So it is what it is, but it changes our job quite a bit on the lending side. Other questions on appraisals?
Yeah, I've never had a success on having an appraisal valuation overturned. I one time had a listing and the appraisal came in $1,500 short. Oh no, it just about blew up the deal because it was a volatile transaction between the seller and the buyer. Yeah, I had the seller side. I mean, I pulled up comps, it was in my own area in Moline, I pulled up perfect comp, she refused to even, I mean, $1,500.
Yeah, what percentage of the transaction was that?
It was a 20% down conventional loan,
On what price point?
$250.
Yeah, so it's like what?
Well,
Less than 1%?
now does the bank institution, the lending institution actually have any power to just waive that?
No.
$1,500?
Yep.
I mean, it caused me a lot of anxiety, I mean, I didn't sleep for a day, like they were.
Why do you think that was? Is she like on a power kick, or that's why?
I don't know,
It
but
seems weird that they would be like that.
I mean, I begged, I groveled, I was trying to, you know, like these sellers were gonna literally walk away from that deal for $1,500.
Wow.
So the appraiser will put his or her compensation. Oh, now you talk to the appraisal management company talks to the appraiser talks to the appraisal management company, and then they come back and talk to me. It's a telephone game. And it's the worst thing they could have done, but they did it, right? So it's not normally personal, it's normally just math, and they just can't make it work. And they probably, I'm sure you've had this conversation, I can look at a report and go, they already stretched. I mean, you're $1,500 sure, but you should have been $5 grand short. You can see it on the report. You can see that they pulled as much as they could pull to get there. Because they're just humans on the other side. Right? No, most of them want
Well,
to
I had
make it work.
another one too, that the appraisal came in low, it was in Mattawan, and I pulled comps, it was 30,000 for that one, but I pulled comps within the school districts. And she refused to even look at it because they were more than 5 miles, it was a rural area, I'm like,
Yeah, that's
there's not a lot of houses within 5 miles.
Nope, that's
You
not.
know, so they would not even consider it, and even though I went by school district on my search, and I had several good comps, that, she said, no, it's too far.
So what I have found, when I am appealing an appraisal, I start with reading the whole appraisal. It doesn't matter what the value is, what matters is, what did the appraiser use? I literally had one house that an appraiser appraised, that he forgot the daylight basement was finished with another bedroom and a family, and a bathroom. Literally forgot it on the whole report. I look for mistakes in the appraisal. I look for mistakes on the property. I look for mistakes on the comparable sales. Start there, guys. If you just you don't like it, and you just send them over comparables, I think the odds are against you. But when you dig into the actual full appraisal and look for an error that would significantly affect the value. Start there.
Yeah.
The other thing I have done when I have a tough appraisal problem, and I will drive by the comparable properties that the appraiser used. And that saved my butt one time, because a couple of the houses that the appraiser used were in significantly less desirable locations right in Middleville. One was next to like an apartment building on a main street, and mine was on a side street, and all a nice little neighborhood. If I'm really stuck, I drive by everything. Once in a while, I've had to call my sellers and say, they're right, the appraiser's right. But if you look for mistakes, and then look at the comps, and look for mistakes there, and then look for better comps, you're gonna have a higher success rate. But Jeff is right, I have absolutely nailed it on appraisals where there were mistakes and errors, and some appraisers will not change, no matter what.
I just had one other thing, Sue. Likewise, I've never been able to get an appraiser to change anything. Once that report is published, you're toast, in my opinion. However, Sue's advocated multiple times, do a comp package.
Yes.
From my perspective, this works, and this works well. If you can get the comp package to the appraiser before they go to the house and share your insights they're more likely to take it into consideration. I'll give you an example, it happened to us, I think, about a year and a half ago, 2 years ago, out in Grand Haven. It was just, it was a house that was inside a subdivision, 450,000. I did the comp package, I knew what we accepted was at the high end. Literally, if you go right outside the subdivision on the main road, it's a little bit busier, but the homes were $100,000 less. There were 2 sales of homes right outside the subdivision. And I'm like, this is gonna be a massive problem because it's gonna drop me $60,000. It's not gonna work. So I literally created a comp package and talked to the appraiser and explained, don't use these 2 houses that are right around the corner because it's a busy road. Busy is, you know, it's subjective. Exactly, it's a very subjective word. It wasn't a 4-lane road, but it was a busier 2-lane road than a 2-lane road in the subdivision. Right.
Yeah.
Thus exclude those houses. And they did. And they appraised the house at purchase price.
Okay.
And I will tell you, had I not had that comp package, had I not proactively done my homework, I'd have been toast.
But in the world that we are currently in, you all are submitting aggressive offers, right? 17 offers on a house. Appraisal gap coverage. All the terminology you're using to be aggressive right now is terminology you need to be aware of for appraisal. If you're nervous about the value, or you think, oh my God, we're going over this, is crazy. So's the appraiser. He's looking at your PA going, what? Okay, game on, let's see. Let's figure this out, yeah? So
in my opinion, by economic, I went to school for economics, right? So when I came out of college, I thought the value of a thing should be what a willing buyer and a willing seller, not under duress, are willing to negotiate as a price. That should be the value of a thing. In the crazy world we live in, with regulations and whatever, and I see why some of these regulations exist, we have to bracket the value, right? There has to be a low side, an at value, and a high side comp that the appraiser is adjusting up and down for. And so when an appraiser is looking at a property with multiple offers, we want to say the value is what buyer and seller are willing to pay, and we're supposed to be able to find a high side comp, and sometimes there is a comp in the marketplace that basically creates the max that an appraisal should come back at for a true comparable sale. So certainly adds some complication and just gives you guys all the opportunity to coach and teach and add a ton of value to your buyers on the front end. I think that comp package is an absolutely excellent way to show value to your buyers.
Yeah, for sure.
here's a question for you, I don't know the answer. When I put in my appraisal order, I always put in the realtor's name and your cell number. Do they actually call you, or are they going through showing time?
They go through showing time, and we have to call them. So if I'm the buyer, I have to call the seller's agency, give me the number. When they register, and I want the number.
Is there a way to make it so that the appraiser has to contact you
Yes,
before?
yes, there's a button on
Is
showing time that you
Okay.
can turn off for the appraiser. So then the appraiser has to call you directly. It works 90% of the time. Every once in a while, showing time screws up.
But that's if you have the listing.
Yes, that's if you have the listing.
So you, in your negotiations, could probably have a discussion with the listing agent to turn that off prior to sending me a PA?
Yes, so I'm gonna say something here, guys. If you are a listing agent and you have any concern whatsoever over an appraisal, it's your job to get that appraisal package together. The buyer's agent should not be doing it. That should be the listing agent's job. However, most agents have not been trained to do appraisal packages.
Correct.
That is very old school.
Yes. I had that exact issue. All the ones that where we have the buyer, I've always had to create the appraisal package because the listing agent doesn't know what the hell they're doing. And I wanna protect our buyer and get them the house. And I don't trust the listing agent to do their job, in my opinion.
Yeah, well,
If it was you, I'd trust you, but.
Yeah, yeah, so, you know, what you wanna
It's not
do
your nature.
is have that conversation, Mr. Or Mrs. List Agent, I can do an appraisal package, will you make sure that the appraiser has to reach out to me? You've gotta get their email and email it to them prior to them getting in the house.
Yes.
They've made up their mind before they ever got to the house.
Oh,
They are just going over there to make sure you don't have an alligator in the basement, that there isn't a nuclear power plant behind the house. They've already made up their mind before they get in that driveway.
Oh yeah, they've pulled comps, they've already done their grid, they've already done their public information, they've already dumped everything in they need to do. They're gonna snap photos, they're gonna do measurements, room counts, they're gonna upload it probably from their car and hit submit.
Yeah,
One more thing to bear in mind, this appraisal report, I'm so grateful to have it for the sake of the buyer, but it really isn't for the buyer, right? It's not the buyer's appraisal, we have to disclose it. It is actually for us to know as a lender that we're attaching a loan to a property and there's enough collateral for us to attach that loan. And all of our pricing, all of Fannie Mae's pricing is based on loan to value ratios, right? So it's not only do we have enough collateral, but do we price this loan correctly in the marketplace? So bear in mind that when the appraisal comes back, the appraiser might have given you value, but we have to underwrite that appraisal report. Meaning, if there are things in the photos that the appraiser didn't make mention of that are obvious, they're obvious problems for the minimum health and safety requirements for a VA, FHA, or conventional loan, we might have to add conditions to that appraisal report as a lender, because if we don't, we could be sending a loan to Fannie Mae that later doesn't get insured, which is pretty expensive for the lender. So that gets me thinking, I think down the road, like we could probably spend an entire day talking war stories and underwriting guidelines surrounding appraisals and value. What we should probably do is get an actual appraiser into your office, maybe in a couple of months as a team meeting, along with a collateral underwriter, because the two of them are working together quite a bit throughout that appraisal process to ensure that this deal really will meet Fannie Mae's underwriting standards. We don't want to over-underwrite it. I think I'm thankful Churchill's taken the position of, I'd rather have some buybacks around property than to over-underwrite and miss out on opportunities for our buyers. So we take a pretty a pretty liberal or aggressive approach to the appraisal process. But those two people, it's like we've actually had only one, thankfully, over 2,000 transactions I've done or more. There was one appraisal that came in at contract price with pretty terrible comps, that after underwriting the appraisal, we had to get comments back from the appraiser, and the appraiser said, oh yeah, you're right, this property is way more comparable, and adjusted value down after having received an at-market value appraisal. So that is possible, the quality has to be there, and I think an appraiser and a collateral underwriter sharing what they go through that process would be extremely helpful for realtors to know in setting expectations, coaching their borrowers, and successful transactions. So, any other thoughts? I mean, again, I feel like we could camp on appraisal literally this entire hour.
Let's move on.
Okay, I guess I can start with this one, and I'd love your feedback, but how to estimate prorated taxes on a sale. Does everyone understand what tax prorations are and why they exist? This is Success Realty. You guys, I feel like this one's a softball for y'all. You're trained on all this. Well, real quickly,
Easy.
so I'm closing a deal today. I'm going to go from here to that closing. And yeah, it's March 12, so roughly 3.5 months. Our buyer's going to take ownership of the property. Out of their escrow account, they're going to pay the summer tax bill in July and the winter tax bill in December. And so they'll have paid for the whole calendar year of taxes. Something people don't really understand is that when you pay your winter tax bill in December of 2024, it's for the calendar year of 2024. So it's January 1 through the end of December. People don't always conceivably catch that, and clients don't always understand that. So since our borrower has not owned the property for January, February, March, all through the 12th, the seller for the summer and winter tax bill is going to owe our buyer for a daily tax charge for summer and winter taxes through our closing date. So they're getting prorated a credit. Now, I do transactions in Detroit. I don't know that you guys will ever get out that direction, but there are different ways in which you can set up your prorations. I've spent thousands of dollars on taxes when I've made a mistake personally to make it right. And you do it once and you'll never do it again.
Never forget it.
So I would say that kind of the default in our area is a calendar year tax proration.
Right.
You'll take the total taxes for the year, divide by 365, and then for however many days, you'll prorate back and forth. Questions on that?
To that point, besides in advance.
Yeah. It's painful when you get it wrong. Their tax bills are like from December 1 through, they just rolls for that next year, and so you just gotta make sure that you're
Are they
prorating.
billed once a year then? over there?
They'll-
No, they're built twice.
Some townships, maybe not so much anymore, but used to be billed it for 1 year, Susan, don't you remember? Some townships, they would only get one tax bill.
I've seen that.
Yeah,
before.
that happened.
Yeah.
We had so much craziness in this area, and the townships would tell, if you called the township, one person would tell the buyers they were prorated in advance. Other townships would say they were prorated in arrears. Your buyers
Yeah.
or sellers ended up mad at you because you were lying to them.
Right.
It was
I
insanity.
had that happen.
And so that calendar year proration thing was, I remember going to a closing in the late 70s where they were almost coming to blows
Yeah.
over it. So that proration thing that we do here has saved our lives, but you get another area of the state, you better be reading those taxes. It's the first thing you check.
But isn't that always the best way to do calendar year proration, no matter what?
No,
East side will
Well-
not do it, it's in advance. When I say east side, like around Ann Arbor, it's all in advance.
Or let's say,
So,
to your question, let's say you have a buyer with limited funds, and you're gonna make your offer today, and it's not a home that has 17 offers on it. Okay, let's just go normal market. You would want to go taxes paid by, summer tax bill to be paid by the seller. Because the majority taxes in Kent County are paid in summer. 90% in Grand Rapids, right, are paid in
Yeah.
summer. Well, so if you have the seller pay the summer tax bill, I just took all that setup for their escrow account out of my equation, which drops your cash flows. So it's not always to the benefit to go with calendar year prorations, it's the path of least resistance for you to get your offer accepted, but it's not the best. Okay, so, there are ways to use it to your advantage, but be prepared for the pushback you may get. You gotta know you have to know your math.
You
Or
just
the
hope
seller's
that the agent who took the offer just doesn't pay.
Most don't pay attention,
Exactly.
most don't pay
That was
attention.
slick, I like that, Josh.
and you need to give them a heads up if it's, because if they don't pay attention. And you get to the closing and the
Yeah.
seller goes crazy on them, and they will. They will. I just did when my buyer was short cash to close, and I prorated taxes in arrears, and that gave him another bump in cash to close.
Two
Wasn't the
things.
sun, the moon, the earth, but it was a bump. Less than he needed.
Two things real quick. One, always watch out. When in doubt, check with the title company. If you're not sure how the
Yeah.
prorations should look, have the title company send you a tax worksheet. They can do the prorations for you. Second, watch for village taxes. Sometimes you have a summer, winter, and village tax.
right,
That can be
Yeah, and if you see that, tell us.
Yeah,
We don't always
please,
see it.
please.
Right, we'll go in and pull up the mills, I'll go to transit, go to their mill rates, it'll give you summer, winter, but it won't necessarily say there's a village tax.
Right.
I mean, you know that Sparta has one, you know
Right.
that Middletown's gonna have one, you know some of them that, because you got stuck with it.
Yeah.
But you don't always know.
Is that on BSA online if they
No.
have it? Where do you find it?
Normally we find it in the title work when it comes back.
Yep.
yeah, read your title work, right.
But that's too late. I already issued my loan estimate. They already went and they're expecting this payment, now I have the village taxes to add to it.
Yeah, but you should get your title work immediately, right away.
Well, but
That's the
quotes,
first
Yeah,
thing.
right? They want
yeah,
the
yeah,
some
yeah.
quotes, right?
Yeah,
And,
Well,
yeah, they've already counted the
Right.
shekels.
right, yeah, so just, I mean, if you know it, you will never ever offend me if you say, hey, there's a village tax. Okay?
Let's roll this into the next question. I'll stop this. I'll tee this up for you. What? How do we estimate closing costs? Sorry. Good luck.
Yeah, well, okay, so, no, not really. So all of you on your phones, I am guessing, either have the Trans app or you have an app from your favorite title company, right? Okay. If it were me, and we've done this before in classes with new agents, and we can do it again, preset the fees in that calculator to your preferred lender, whoever that is. Right? You can open the Trans app right now, and we can go, and it's right there, it's in the Trans app. You literally open it up, you go buyer, you put in the address, it will autofill the taxes from BSA for you. it'll pull it down in, right? If you have the closing cost set for Churchill or for Fairway or for whomever, it's already in there, and you hit calculate, you're gonna be within $400 or $500 cash to close. You're gonna be doggone close. So if you're asking me for your day-to-day, how do you estimate closing costs? Right there, it's in your hand. You're literally carrying it around with you. You don't have to worry about your lender calling you back, you don't have to worry about time frames. You can just program it and it's done. You set it, forget it, one time. That's how I would do it.
If FICO's on a little on the side, that's where things can get tricky.
Right.
And anytime you've got a house in mind, like don't hesitate to reach out to me or Jeff.
Right.
Like, if there's houses that you want an estimate for that borrower specifically, we're going over all of that with them directly.
Well, yeah.
Loan structure can change, but I think that's a great,
If it's time to
that's a
make
great
the
way.
offer, then we absolutely want to get on the line with you. But if you're on the fly, that's the
Yeah.
greatest way to do it.
Yeah.
I get what you mean.
You know, over the weekend, I had a conversation with a couple of people, and we changed the pre-approval amount for the borrower based on the taxes of the specific property.
Yeah.
It went up, right? So they wanted to make this, here's my pre-approval, they're going to 180, we find a new house. The dollar I used for my tax estimate was about $100 a month high, now they're at 270. So it changed significantly what they could do in the moment, and working on weekends is not a problem. I mean, we understand that Monday through Friday people work, that's where they go earn their living, and on the weekend they shop, or at night they shop. Some of us time block out. I mean, Sunday mornings I'm not going to be available, so probably 11 o'clock, right? I got commitments on Sundays. But beyond that, I'm going to hop back on and I'll get you your numbers. I'll go specifically to it. So if it's about a specific property, right, I'll hop it.
I would say to, yeah, closing costs can vary quite a bit from lender to lender, and I think as clear as we can both be on that, like we have nothing to hide. Like we want clarity for the client. I think that just creates a really smooth process for them, like a really reliable process, so don't ever hesitate to bother us about that. I was going to add to it, what costs do buyers incur on a mortgage that are not part of the buyer's closing costs for the loan?
What's your favorite?
What's that?
What's your favorite?
What's my favorite closing cost?
That's not included on our fees.
Hold on, I'm trying to understand the question real quick. What do buyers incur on a mortgage that are not part of buyer's closing costs for the loan? Those are like the same thing, mortgage and loan. What do you, is the question basically?
Sounds like I was getting tired when I said that.
Now you're so think here's
What are
like
some questions?
insurance and stuff
realtor
like
admin
that.
fee. Realtor
Yeah,
admin
yeah,
fee
yeah.
Yeah.
is the cost that's incurred. And
Survey.
it literally goes different amongst the agencies you go to,
Yeah.
right? So depending who you work with,
Yeah.
I gotta know what you're in.
Yeah.
K-Dub has all these different offices and all of them have a different one.
Well,
Right, so you're
some
constantly
agents will de facto charge a buyer's agent fee of 1% to all of their buyers. So they're getting, 3% from the listing side, but they're also charging 1% as a commission on top of their admin fee, and it's like,
I like it.
I
That's a good idea.
You charge.
Yeah, the beyond that,
that's up to you.
how about
Justify your value.
condo initiation fees?
1%.
Yeah,
Right, you got condo fees that are gonna come in, you're gonna have your first month that you're gonna have to put in. You're gonna have survey fees, to Sue's point. Now that's dictated by your PA.
Yeah.
Unless you are on water, it's new construction, I'm not gonna ask you for a survey.
Yeah.
Right? So if your PA says you're getting a survey, I'm gonna disclose it. If your PA does not say you're getting a survey, I'm not gonna disclose it, even if you chose to get one.
Eva?
So I have a question. So when we're doing those net sheets for clients, what is the safe number to put? Because, on those net sheets, when you give it to them, they don't necessarily show the lender fees. Obviously, like you said, we don't know what the lender fees are gonna be. Is it safe to put like a 2%, 1%?
Well, when you're doing your net, I'm assuming you mean for the seller, right?
For buyers.
For the buyer, okay.
Their cash to close sheet.
Yeah.
Yes, it doesn't, I did it, because I noticed that the other day, I'm looking, it says title fees, in the terms of title fees, it says transfer fees, but obviously there is a fee, so we go and erroneously give this to the client, but then all of a sudden, it's more. So is it safe to put 1%, 2%, 3%?
Not really, because your sales price is gonna change that, right? So if you put 1% on a $100,000 home or 1% on a
Right.
$700,000
Right.
home, you're gonna take yourself out of market.
Gotcha.
But what you could do is
Are the
with
taxes
your,
prorated or not?
Yeah.
How big is the escrow deposit? It's like the list goes on and on. Title insurance is based on your loan amount, so it could be a $600,000 contract or only a $200,000 loan, and now we have low title insurance. So,
who do you primarily use? Who do you find yourself going back and forth
I mean, for the,
for buyers? I mean, if you make a recommendation to a lender, who do you normally use?
whoever they wanna use.
Okay, because what I was gonna say, you could pop in, again, I hate to keep bringing up the Trans app, but if you click on fee details, you can change it and save it. So it goes right specifically to your, but let's say everyone will have a processing fee, everyone will have an underwriting fee, everyone will have an appraisal fee, everybody will have an appraisal review fee, everybody will have a flood cert, everybody will have a credit report, and they're pretty standard fees.
But even,
So you can set them to your average, and then it will calculate title insurance, it will calculate transfer fees, it'll even do prorations. If you wanna change the prorations within it, you can change those, or you can leave it standard. It'll pull in 12 months worth of homeowner's insurance. So it literally, specific to your property, will dial it down for you.
the tricky
Really,
part,
really.
yeah, so I would say, like, if you're $200 to $250, you're probably looking at $2,500 in hard costs. If you're looking at $300 to $600,
Now, we're talking mortgage amount.
Yes.
yeah, I meant like contract with a minimum down payment, but yeah, roughly mortgage amount, yeah.
Yeah,
If you're talking like 3 to 400, 3 to 500, somewhere in that range, you're probably somewhere around $3,500 title insurance is going up. But again, it's like if you're working with a lender that's brokering, as I've noticed, a lot of the different broker relationships that we have different admin fees or processing fees. So some of that's not related to us, but if I'm doing an in-house, we're gonna fund it, we're gonna service that loan, we're a processing fee and an underwriting charge, your credit reporting, like all the vendor stuff from there, title insurance, right? So, and then it, kinda comes down to, did they wanna buy a point? Were we forced into points due to a lower FICO score or a 15-year term at times? It's like, it gets complicated, so you can generalize, and if you ask us to hit a certain cash to close number, a lot of times we can get creative to make that to work. But I would always, always, always make sure that the lender has provided a breakdown for their financial situation specifically, and then refer back to that as you're building. But as a quick rough and dirty first conversation with a borrower, that's brilliant advice, and because Trans is gonna at least update your title insurance and like some of your loan size stuff as you go through their app, but you're usually a processing fee and an underwriting fee, and then if there are points for the rate they chose. Yeah.
Okay,
Yeah.
thank you.
Okay,
Avoided that one.
surveys, you wanna nail that one?
What's a survey?
Survey, you're checking the property boundary lines
Survey
of the
says.
property. Value is important because this size of the lot, excuse me, can factor into the comp value and the adjustments that are made. A lot of stuff has come up on surveys over the years for me.
Who's paying for the survey? Buyers, primarily.
It's negotiable.
Negotiable?
It's
Seller's
yeah,
market
you're
and
gonna-
buyer.
It's actually a check mark.
yeah.
Buyer, seller, it could be a mortgage bound, it could be a mortgage survey, it could be an iron stake survey. You drive the train on that, on what you want.
Yeah, in like suburban areas, I don't know that surveys are all that important, but as you especially get out of the city, more rural areas, that can be extremely impactful, knowing exactly what the boundary lines are. And there are times where a survey could be required, where everything we're seeing online indicates that maybe there is an encroachment on the property, in which case a survey could be required by an underwriter to prove that the shed or the neighbor's garage or whatever is not over the property line, in which case we could be doing a boundary line move or some other solution with the title works help to get through that problem.
Isn't it though, is it 7 or 14 years that if it's been on, or it's encroached onto that property line or it's been over, they now own that property?
Through adverse possession.
Adverse possession law.
Yeah, but the encroachment of a structure can get very difficult as far as insurance and Fannie Mae's willingness to insure the property. If you're doing cash transactions, maybe it's less difficult, but getting title insurance, appraisal, all of that would be impacted. I would imagine by an encroachment of a structure.
And I don't know the time frame for adverse possession, or if that even applies in Michigan.
It does, we're dealing with it right now with an issue.
But then how do you determine the start date of the adverse possession,
That's,
right? And I think that's the great, and
That's where we're
that's
at
not
right
gonna be
now.
covered on a survey. The survey's gonna catch the fence that was built over the lot. I mean, if you have a detached garage,
Right,
you
that's
might
like
wanna get a
classic.
survey, right? Because that's normally where this crap happens.
Yep.
If you share driveway, okay, get a survey.
Yeah.
That happens in the city of Grand Rapids, you're gonna find shared driveways all the time for the city of
Right.
Wyoming. However, if you're, like you said, if you're in the city of, chances are pretty good you don't need one.
And a survey is a survey is a survey, so if they've got one, seller's got one, or maybe we find one on LinkedIn. I wasn't really sure do for pretty standard in the state of Michigan that the seller would pay for the owner's title insurance policy on behalf of the new buyer. In Ohio, a lot of deals I'll do there, pretty common that the buyer will pay the owner's policy. Highly recommend it, but you can negotiate it out. Some builders will try to do that since they've got all the lien waivers and whatever. They'll say, oh, we don't want to pay for the owner's insurance, and they're smart enough to know that they, in theory, could get out of it. But in Michigan, it is the seller's responsibility to convey a clear title to the buyers. And that's like the cheapest, smartest, wisest thing you could possibly coach your seller to do to avoid a lawsuit or any problems, any financial obligation down the road, because they've done the title searches and they're insuring, and any risk of lien on the property or ownership interest is then insured for that new buyer. Questions, thoughts on title insurance?
Once you have title insurance, do you need to do a home title lock, something like that?
Excuse me?
And once you have home title insurance, do you need to do a home title lock, like they constantly advertise?
Home title lock. I'm not sure if I've come across that.
Yeah, so you're.
Like blockchain sort of world?
Well, so you don't
It
get
puts a lock on
scammed
your
and
title, so if
somebody,
anybody puts any kind of a deed on,
Oh, okay.
and or a mechanics lien, and or you're notified.
Could not know about it.
I've
Okay.
never heard of that.
Yeah, so there's a significant amount of fraud in Florida, imagine, in Florida.
People that go to Florida do.
Especially in
here.
Broward, right? So,
Yeah.
I mean, you'll find lenders who won't even lend in Broward County. That's where a lot of that happens. They'll come and they'll actually attach, it's a vacant lot, and they'll just deed it to themselves. They'll throw it on there. Well, if you've locked down your title, like what you're referencing, that's a newer thing that the title companies are offering. It's just a title lock. And I don't think it's that expensive. I think it's a one-time fee, and they throw it on there, and then if something happens, you're notified.
Yeah, buyers, they definitely want title insurance. Why are loans closed at title companies? Why does that happen? You want to add to that?
Well, there's a fiduciary responsibility that comes there, right? So we go to the title company, and they are, so you'll notice that we have your borrowers, when you have a buyer, make their funds payable to the title company, not to the mortgage company. They are responsible for dispersing all funds. They are the final gatekeeper, so to speak. And I don't want to use the word bond the closing, but that's basically what they're doing, that all parties that need to be paid off have been paid off, all liens have been extinguished, and then the mortgage is going to be recorded in proper fashion from the new lender. We all close there so that you have an objective third party dispersing. Beyond that,
Been pretty regulated. I don't see a lot of variance in costs from title to title.
the state of Michigan mandates their premiums, they're all Alta insured. Each title company, if you are an Alta insured title company, will accept a check from the other. And then Alta is just what American Land Title Agency, I think is what the acronym stands for. You will find title companies that are not Alta insured, don't use them.
Yeah.
Just don't.
So you can take your money and go to Florida.
They can do anything they want to with it, only some mom and pop in a rural environment. However, even our closing area may bump you on that, because we approve all of the title companies that we use.
Same. Yeah.
So if it's not Alta insured, we're not gonna do it.
So impartial third party can handle all the funds, can provide the insurance, important service. There is more and more disruption, it seems like, with title companies as technology steps into the marketplace. Obviously, blockchain technology, if there was a way to know through the blockchain that all the hands that have owned that property, there's some thought, well, would the title insurance be necessary? We will see what happens there down the road, but that's been kind of the buzz over the last couple of years. I've also, most of the closings I'll do, obviously know your client and what they can handle or what they prefer, but most of our closings are now hybrids. It used to be that you'd go sign all the lender documents and title transfer documents at the closing table. nowadays I have most, especially people who are tech savvy and have been working through the platform up through the process. I mean, I've got a client right now who's 70, so I don't think we're gonna be doing a hybrid or any e-signing, we'll do it all hand sign. But that just reduces the amount of work for the title company at close and the chance of something needing re-signed or initialed or fixed later. And e-notes, those types of things are helping to get funding to happen fast and recording the mortgage to happen really quickly. And I think it's only going to continue to go that direction. We're doing some runs, like a client's at an airport and needs to electronically sign from somewhere, but to be honest, I think that technology needs some development. But for Encino or Simple Nexus, I think you guys are using that too. The platforms that we're using for those hybrid closings are very user-friendly. It's what they've signed all of their loan documents with up till that point. And so doing a hybrid closing, e-signing part of it and signing just the title-specific documents at closing really reduces time at close. You can just celebrate on the fun part, Why not celebrate the closing instead of spending our whole time signing paperwork?
Correct. If that didn't make sense to you all, he's saying we're sending them their closing docs on dot loop and they're signing it.
Essentially.
I thought they had to be a wet signature.
There are certain documents that have to be a wet signature, no, for sure, right? That's the promise to pay. We want on the mortgage as well, because it's a recordable document. But it doesn't necessarily have to be. The remote only that he's on with Ron, literally you have people zooming in and they will attest to the fact that you provided the documentation, you truly are who you are, and then you'll notarize it.
A lot of that's on the counties that you're in, but we'll do an e-note along with that hybrid closing. So they're signing the deeds at close, but we'll still e-sign the note depending on what county. Like Ottawa and Kent, a lot of those are pretty friendly to that. You get into more rural counties where all their paperwork's in a box under some lady's desk,
Works Tuesdays and Thursdays.
yeah, those get a little bit less technology savvy. So, it takes a little work, but I think for our local closings, it's just streamlined, easy, fast is appreciated, and then focus on relationship, and that's what I would prefer to do, is just loan strategy and more relationship with the client. That's what we want. Long-term lender for life relationship. I guess I would open it up at this point to 10-15 minutes of you've got a captive, couple of loan officers held captive, but any questions about any third parties, underwriting process, rates, sales tactics we found to be helpful. Anything you guys have questions about that you want to bounce off the two of us?
I have a funny story.
Hit me.
So one time I sold a house in Wayland and it was just some friends of mine and it was a foreclosure. And the loan was through United Bank. So the loan officer was so overwhelmed and it just didn't go well. So they had a remote closer, it was called the closing bug. And this lady showed up in a VW bug and her nails were this long. No, I'm not kidding. And it was 4:45 at United Bank in Wayland. They made us leave the bank. They're like, we're closing now, we have to lock the doors. We had to go to the library in Wayland to finish the closing. And I'll never forget that lady showing up like that. I'm like, oh my gosh. It was, yeah, and they made us literally get up and leave the building. And that's not okay because they also have an insurance company there. They could have, well, it's federal law. They said they have to lock the doors at 5 o'clock and everybody has to leave the bank. I'm like, that's federal.
I work for banks, that's not true. That's just a bank policy.
Yeah, I was flabbergasted. Oh my gosh. My buyers were crying. She was crying. Mrs. Buyer was crying, bawling, sobbing. Luckily, the library was open. And so that closing bug lady, she was making all the copies at the library. The worst thing ever.
When was that? 2008?
Oh my gosh.
I knew you were going to say 2008.
They've been there.
Everything is crazy.
That was probably 20 years ago. And they still live there. But, for instance, they bought the house for $105,000. A brick house with a in-ground pool in the city. So how long ago was that? Yeah.
Yeah, your early 20s, 2000s.
It was just, I will never forget, I saw the image in my mind of that lady coming up and Just she had cowboy boots on, a red fringe jacket, and a big cowboy hat. Everybody else were like this,
Oh,
yes,
boy.
yes,
Yeehaw.
I know.
That's funny.
And she did a good job, I mean, she didn't get frazzled at all. She's like, well, I guess we got him, and everybody's like, what are we gonna do? And we're like, well, let's go to the library.
I guess I would ask maybe a question of you all is like, what is a working frustration that you guys have with lending that you feel we have an opportunity to speak to for realtors? And it could be about me or about any lender you've worked with in the industry. Like, what do you guys come across that drives you bananas? And what do you appreciate out of the lenders that you guys like to work with?
I appreciate the fact that I'm involved, or at least I receive information every step of the way.
Mm-hmm.
I had one transaction where that didn't happen with a newer company, and the person I worked with did their job, and then I didn't hear anything, and I'm like, what's going on here? And unfortunately, that doesn't no longer exist. But for me, I don't know about anybody else, but when I know what's going on each step, then I can talk to my client about each step to make sure they're understanding each step. I think that's tremendously helpful.
How do you want that communicated?
Email for me, email, text message, phone call. I'm easy, just not cheap. I knew you'd catch that, John.
Anything else you guys would
That
add?
was just funny, that was a joke.
I do have a question on the 6% that the sellers allowed to do for closings for the buyers. How would that work? How do you put it on the PA?
See it in different places, but oftentimes it's just written to the other provisions section of the contract. You know, seller to pay up to 6% of the contract price towards buyer's closing costs and prepaids. Something like that. Underwriting doesn't always want it to say 6% even, because if we don't use it all up, that gap drives their brains crazy. But saying up to 6%, and obviously our job is to make sure we maximize using up all of the concessions. Now, seller concessions, when the seller can contribute to a buyer's closing costs, is dependent a little bit on the program that you choose, so make sure to check with your loan officer. Because if you're doing minimum down conventional, you can only do up to 3%. I think that's, are we talking about that, or are we talking about commissions, 6%? Okay, so if you do 10% down conventional, that goes up, 25% down, it goes up again for conventional loans, but just make sure you know how much you can get. I think USDA is 6, I think VA is 4.
Oh, I was right too, John.
Okay, no, so yeah, just, I think other provisions,
cut 'em off.
yeah.
He's just talking here, so.
Thank you.
So nice, it's a song.
I appreciate you guys heavily for also explaining of the programs out there to help our buyers out. Versus I have had experience with like Federal Credit Union, they don't care. It's just another bee on the wall. Conventional FHA, Fannie Mae, they just don't care. Yeah. So you
Well,
guys are,
Thanks for
Just the
saying
fact that
that.
you guys are here is awesome.
yeah.
I mean, because it's giving us information, especially new, that they're not worried, like she's saying, we're not gonna get from somebody else.
Yeah, so do me a favor, we're gonna talk at Seeds of Success with Rob Hughes about story selling. Tell that story to future buyers of your experience with, and you don't even have to use Gerber, you can use bank or credit union or whatever you wanna say.
USAA.
But that's
PNC, probably not closing.
I can speak for myself, but I know Jeff's the same way. We're passionate about what we do, and so we take it personally when we hear about buyers that get to closing and weren't educated.
Yep.
Like, we hate that. We hate knowing that someone's bought a house and doesn't understand the mortgage they took out. And so that experience, I'm glad that you had a transaction with a different lender, because I think you can now share some things about what you appreciate in a quality lender and what you can expect from Jeff or Chris. I think that's a good story to share with them.
Absolutely.
Thank you. Any other questions? Got us for 5 more minutes probably?
With the lawsuit on the buyer's commission and all that sort of thing, what do you guys see from a lender's point of view that might help us know how to write a contract, that sort of a thing? Because what I'm seeing is if we get to that point, you know, well, if the house is at 200,000, we'll ask for 206 and then the seller to pay the buyer's commission. How is that gonna impact how we progress with our buyer with you guys?
From my perspective, it's really dependent on how legislation comes out on that, what they're gonna require. We're gonna execute on the contract however it's written, per usual. It's always been possible for a buyer's agent to pay. I would just recommend that each one of you start to coach your clients, or maybe not be so quick to say, oh, don't worry, you know, the seller's gonna pay my commission. Well, if it takes them 9 months or a year or 2 years to buy a house, just let them know. There's a way to say that. Maybe get coaching from Sue. Maybe she's got some ideas on how to say this. But we don't want to be so hard that definitely seller's going to pay the commission, that if things change, you don't want to have to go back on that later. Expectations are crucial for the borrower experience. But on our end, we're just going to look for strategies to help to offset that in cash, whether it's down payment assistance, reducing down payment a little bit, sharing them with them different strategies. And we're just going to do what we've always done and coach, educate, lead them through that process in a way where they're understanding it's transparent. I don't know if there's anything else really to do on the lending side. It just impacts their cash to close.
I think the bigger issue is when you get to your closing, we had our first experience with the closer not handling it correctly, and one of our agents got shorted 1% right at the closing. And you need to be communicating with your closer, because I don't think they all get it. And they're just in a big hurry to close the sale. They're not concerned about your commission, which is crazy. But we had that last month with a sale, and I was livid. And after the sale closed, there's not a whole lot I can do.
I guess from my perspective, the lawsuit basically said we had to uncouple the buyer's commission from being a mandated piece within the sales transaction, right? But it didn't change the fact that you can negotiate it to be coming to you from the seller. So it didn't change a lot, it just changed semantics in how you present. I don't think it needs to be a huge discussion, especially on listing appointments, unless they bring it up, and then it's really just a matter of, it's what it has always been, it's just different. Right? I mean, it's the same thing, only different. Or just how we're presenting it. I'm no longer saying the seller works, or the seller pays your fee, you don't pay anything. You're changing that to what the buyer's paying, either whether it's through sales price or directly. Right? So that's really the only differential that's coming back into play. There's a lot of splash and a lot of sizzle. Sizzle sells clicks, clicks sell ads, ads sell space. Right? So it's going to be out there for a while. You're going to have to address it for a while, but it's only as big as you make it. I feel. I mean, you would speak to a better.
When you're doing a listing appointment, you're going to get those belligerent sellers, and they exist. They just exist like belligerent buyers. We all know them. I don't want to pay the buyer's agent fee, or I shouldn't pay this, or I shouldn't pay that. Get the listing.
Yep.
If they want to blow off both their feet and sell for a low price because they're not paying a buyer agency commission, fine, just fine, let them blow off their feet. You make sure they understand that a lot of agents may choose not to show the home unless they have a buyer capable of paying their commission. Nobody works for free.
Yeah.
Always say, nobody works for free. So, you may find out that if the buyer doesn't have the additional cash to pay the buyer's agent, that agent won't be showing that property, not because they're discriminating against it, but everybody has to get paid, And FHA and VA buyers, it's really cumbersome with. NISHDA is cumbersome with.
NISHDA won't allow a seller to pay a commission.
No, a buyer.
I mean, a buyer. They
So
won't allow the buyer to pay
Right. That was the
I had a
sale we
situation
lost our
like that.
commission on, and our lender told the closer to put it on the seller side, and she just decided to have the seller pay us out of close. We don't even know the seller. Good luck with that.
Yeah,
So what I'm kind of trying to say here, guys, is you better be reading your closing statements, both sides, make sure you're getting paid. And you,
Go to the closing.
better go to your closing.
yeah,
And if it's a buyer side sale, make sure you're looking at the seller side sale. If they're paying your commission, make sure it's there
Yes.
before your buyer signs, because I have no power. It used to be I could rescind a closing, but now I can't rescind closings anymore. I didn't know that. I tried to do that on resale. I tried to rescind the closing. But when they changed the law that the broker doesn't have to sign, they took away my power to rescind.
What's going through your head?
I got a question for you guys.
He's looking out of his body.
Yeah, so, you know, I was listening the other night, and I don't know how many people are aware, California does a lot of interesting things that can affect the rest of the world. There's currently a bill that is about to go forward about newcomers, which will open up the pool of buyers, because it basically says that you can't discriminate against them. They are allowed to follow, just like every other US citizen, in all lending programs. Thus, what are you guys hearing? Because I suspect this will pass. What are you guys hearing within the industry on what's gonna happen?
I've not come across that bill yet.
It's a big deal.
No, so it's a state-sponsored bill.
Yeah, it's
For
for
California specifically?
And
specifically,
it
all
speaks-
newcomers cannot be discriminated against in the world of lending and buying homes is the concept. So any program that is offered to a US citizen or national is now offered to everybody. For me, from a buyer's perspective, great, I have more buyers.
My first reaction to that would be that let's just say that the state came down and said, you have to open it to all parties, it's a state law, it's not national, and you've not, in fact, Freddie, Fannie, Ginnie has not changed any of their rules and regulations, then I would see a lender pulling out. I won't write loans in your state.
Really?
You'd say,
Why would I
what,
write?
Jeff? Say that
I would
again?
pull out. Why would I write loans in your state? I can't sell it to Fannie, I can't sell it to Freddie, I can't sell it to VA, I can't give it to USDA, I can't give it to anybody. It's
Yeah.
So
it's
then
fine,
in
you
order
guys
to
don't-
do
it's
that, they
great
gotta
you
get
guys
the
don't.
government to change
Right.
Freddie, Fannie.
You didn't change any of those, if you didn't change my regs.
Well, let's say
Right.
hypothetically, California,
Yeah.
depending on state control, government control, with the exception of Congress, if you have to go through Congress,
Right.
could you pass it quickly? Is this doable?
Oh, it's doable.
Cause you would still
Yeah.
have to
Because
have
it-
credit score,
Does it
right?
have to go through
In order to get a
Congress?
loan.
You have to meet regular.
Or can
all
the
other
Yeah.
president just do an executive order?
For HUD, for FHA, you'd have to go through the Federal Register, put it as a notice and put it out. Fannie and Freddie
Could
wouldn't
Biden
necessarily
just
need
do
to
an
it.
executive order and approve it?
No, I mean, he could in the short term, but not in the long term.
They'd fight, you go through the courts.
Well, no, you have to go through certain procedures to pass it under the charters for HUD specifically. Fannie and Freddie are regulated by FHFA, so it may be faster to come through that, because remember.
Because
it
I'm
used to
thinking,
be
how can
right.
Gavin get it approved quickly? I mean, Gavin's
Well,
not a fool, he knows what he's
No,
doing.
he's not, but he's also a political animal who passed that political law that's at a state level. I mean, it looks great, but now you gotta execute it.
Exactly, so
Well,
how
if
can
you
you do
can't
it quickly?
execute it, right, and it's no different than the insurers leaving the state of California being sued. We're still leaving, right? State Farm's gone, Allstate's gone, they're not right. They're done, they're not, we're out. And they're not closing loans in California because they can't get homeowners insurance. Not for the same reason Audrey's happened, but they're out, they're not gonna cover it anymore. So, I
But
mean,
you're exactly right, it'd have to be on the federal level. Once there's an insurance policy in place, and we can get the loan insured, we don't care. We
No.
gladly write that loan, right?
Right, so then they've gotta fix that in order to make this work.
We need to know that when we fund the loan, there's an
Right.
insurance policy for the type of loans we're giving out.
So it's one thing to pass a bill, but if the bill's
if I
not.
can't sell it
Right.
on the
It also-
secondary market, I'm not gonna write it.
Yeah. But
So they gotta fix that.
all of this is insurance too, so the change to the buyer pool could change how those loans are.
Sure.
Once they start seeing improving, steady, or declining default rates, that could impact And there's gonna be a lot more demand for houses, probably, it's gonna
Oh,
change the housing,
there's
it's gonna
a ton
change
of
everything,
money.
right?
A ton of money.
I would love if they got rid of the, if I didn't have to worry about your visa type, if I didn't worry about a green card, if all I had to worry about was
That's basically what
EADs.
you're saying, it doesn't matter.
As a lender, I'm rejoicing, I mean, it is a happy day for me. I
Exactly,
can
for
serve more
everybody.
people.
Yes.
But if I, right on, we think of, from our perspective, you write the loan, you close on a $350,000 mortgage and you go deliver it to Fannie and Fannie says, yeah, we're not buying that, doesn't even mean it, that's yours, you own that now. Well, you only do 3 or 4 of those and you're closed. I mean, you just can't, and so it's all well and good that you said I have the ability to, but I won't. So I'm sure there's more within that, and I'm sure some of that's coming back to maybe some of their state, like bond programs.
I think
That
about
makes sense, but you
marijuana
can do
too,
that.
it's like federal and state approval, right?
Right.
A lot of the states are okay with it, but like Fannie Mae sees that in a house
Any activity.
and it's illegal on a federal level, we have problems on the lending side, right? So same thing.
Right. But that'll, you're right, it will change, right? The demographics are changing, the structures are changing, things will change. But it can't be, it won't be that, it can't be that.
Can we celebrate though that?
That would be cool, I'm all for it, change it.
He's so good.
Let them buy.
Cool.
Other questions?
Did you guys learn a lot?
Yes.
Yep. Okay.
Bored out of your minds?
I can't believe they're still here.
Well, I think the knowledge, I can't thank you guys enough, because what I'm finding out in the field is that so many agents are oblivious of how lending really works. And you walk in, I always say, most of the problems a newer agent has are coming at them like a Mack truck, they just don't know it. It was out there to begin with, and they just had no idea that they had walked into a disaster. So I'm really appreciative when you guys call us on weekends and talk with us, so we can head off as much angst for you as possible. So thank you to Jeff and Chris.
I like the format, because we cover more than just lending. That's what I like about this format. I mean, we seem to kind of free flow into different areas. And if you guys want to do this more, I'm all about doing it more, because I feel like I'm just sitting around shooting the crap with y'all.
Yeah, it's fun.
I enjoy
Yeah,
it.
we appreciate it.
Sure.
We really appreciate both of you taking your time. Thank you
Yeah,
so much.
thank you.
Yes,
Thank you.
you guys.
Gary,